Good afternoon and welcome to NYFP. In midday trade on this Tuesday afternoon, the equity averages remain in positive territory with the Dow up by triple digits. Joining me this afternoon to weigh in on the market action is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me today.
Nice to be back.
Well, we got some better than expected U.S. economic data releases, and we saw global equity markets stabilize on some comments out from central bankers. Now, today's economic data releases in terms of housing, durable goods orders, and consumer confidence, they're all better than expected, and it does come in line with the Fed's assessment of the U.S. economy. So what do you expect to see going forward?
Well, you know, I think the fact that the Federal Reserve and the Chinese Central Bank is beginning to talk down some of the recent problems, especially the backup in interest rates, I think is going to prove successful. You know, if you look at what's happening in the bond market today, the last time I checked, the 10-year note yield was up by about 2 or 3 points, and that is 2 or 3 basis points. And basically, if you take into consideration all the economic data that we had today, that's pretty good, considering we saw consumers' confidence actually come in at very high levels, and that was somewhat surprising. Durable goods orders, you know, came in better than expected. Of course, if you take away the transportation's index, it showed that the rest of the sectors had a very modest climb. And so that basically falls in line with what the Fed has been saying, that economic conditions are going to stay modest for the balance of the year. And then as we go into 2014, we can see a pickup in economic activity. So I think, you know, the market has certainly been under a lot of stress since last week's FOMC announcement and Bernanke's transparency about trimming stimulants. You know, I think we move into a trading range. I still hold for that 1 to 3% trading range during the summer months, and I kind of suspect that that over the next week or so, we could actually see bond yields settle down, possibly the 10-year falling under 2.5%.
And Peter, I know that you maintain your trading range for the equity averages for the summer months, and indeed even today the IMS chief economist Olivier Blanchard, he did say that recent moves have been exaggerated in the equity markets. Now going forward, we get a lot of Fed speeches this week. Tomorrow through Friday, they're both voting as well as non-voting members of the FOMC. Do you think we can get anything of substance from those speakers?
Absolutely. I think we'll continue to see this downplay of trimming back of stimulants and what they mean for the markets, and I kind of suspect that that's what's going to drive yields lower over the next week or so. So yeah, I think that that program now is in full progress and it will continue. And I also you know, think we'll get even further positive comments out of China, which, you know, I think was probably even more responsible for the huge backup that we had in yields and the sharp drop in equities, as opposed to the FOMC minutes and Mr. Bernanke.
Well, Peter, we'll see what plays out in the rest of this week, and I'll speak to you Friday once we get through all those Fed speeches. Thank you so much for joining me today.
My pleasure.